You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music can mean but one thing. It is time once again for the old Options Bootcamp, the program for you, the busy, the active, maybe sometimes confused retail stock trader. Maybe you're dipping your toes into options for the first time. Maybe you've done so. A lot of you have done so on your own this year, and you're looking for a little bit of guidance, a little bit of help. Either way, we got you covered. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which so many of you are mainlining these days. Remember, you like what you hear? This show, anything else we do on the network, keep those reviews coming. More important than ever. Think of it as a little Christmas gift for us here on the network. Helps new people continue to discover our shows. We've seen an influx of all sorts of interesting folks over the course of this year. We love to see it. We love to hear from you guys. So keep those reviews coming. Keep those questions coming too, because on an episode like today, it's really going to be a lot of fun getting into all those, because it is holiday mail call time, and joining me to help me answer your slew, your legion, your plethora of options questions, none other than Mr. P, a.k.a. the black-hatted one, a.k.a. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the program, sir.
It's always good to be back, Mark.
You sound like you're dripping with enthusiasm, so I can hear the holiday cheer. Have you had too much eggnog before the show, sir? Is that what it is?
No, I skip all that eggnog. I just drink the brandy straight.
Yeah, why mess around with the intermediary, right? Why you need a middleman? Go straight to the hard stuff. And we're going to go straight to your questions with a special holiday mail call palooza.
Mail call. Time to look at questions submitted by our listeners.
All right, let's do it. Let's get mail calling. Let's kick things off. Dan, actually, sometimes I like to turn the spotlight back upon the listeners. We did that recently here. A lot of people have been asking us about what's going on with vol, what's going on with VIX and spikes and VolQ and all these products. You know, the markets are at or near all-time highs, yet they remain fairly elevated, most of them in the 20s out there right now, which is not what you usually associate with all-time highs in equity indices. So we thought we'd turn the question back to them, Dan. We asked you quite simply, markets are at all-time highs across the board, VIX, spikes, VolQ, whatever. They all remain elevated. Quite simply, we want to know why. And we gave you 3 alternatives with some others you can write in. We gave you pandemic fears. We gave you stimulus concerns. We gave you valuation/sell-off fears or other. And you guys wrote in with a bunch of things, the Georgia election, Brexit, a bunch of other interesting things that you thought were maybe propping things up out there. But Mr. P, I'm curious for you, if you have a vote on this in terms of what you think is keeping it elevated, have at it. And then B, more importantly, what do you think our audience voted for?
Oh, man, it is so hard. I mean, like anybody who's spent a long time in trading, like, I've studied economics and I look at these things, but it is, it's tough to know why the market's moving certain ways. Like, is it fairly valued? Is it overvalued? Could it be undervalued? I just sense, the last episode that we recorded, we did talk a lot about how there's a lot of retail people out there, and most of them are just doing nothing but buying calls, which creates, some buoyancy in the market because market makers have to buy stock, the underlying stock, to hedge. So, but, maybe they're right, and maybe they're part of the price discovery process, You have the Fed supporting the markets. They just came out, the last Fed meeting and said that they're going to keep supporting the markets. So I don't know. We'll see. I mean, PE ratios before the pandemic were, many people were saying they were somewhat high, and now they're high too. But I know there's a little bit of a meandering answer, and I apologize for that, but I'm just trying to throw in all these disjointed thoughts. We're also seeing, we talked a couple episodes ago about the great rotation. We're seeing some companies are killing it and doing really, really great, like, not just their stock price, but their actual revenues as a result of the pandemic. And they're factored into, what we generically call the market as a whole too. So, I don't know. I mean, I wouldn't be surprised if we just continue going up from here, and I wouldn't be terribly surprised if there's somewhat of a pullback.
I think you should go participate in that Georgia runoff. So I think you have a political career ahead of you, given that answer, sir. That'd be a good one on the presidential debate stage, a non-answer answer. Let's see out here what our audience voted for. And they pretty much came in. It was pretty contentious for a while, but they ended up lumping it together at valuation and sell-off fears at about 43.5%. Stimulus concerns were there as well. We posted this right before the stimulus conversation really seemed to kick into high gear. So that was about 32.9%. Then pandemic fears, only 18.8%, maybe vaccines tamping that down a little bit. And then about 5% coming in with other. And I mentioned a bunch of the interesting others you guys threw at us, which were certainly fascinating. All right, let's get into the meat here. Dan, this comes from Prescient Trading. This kind of touched on what we touched on last episode. We were talking all about Tesla skew and options and everything. Prescient Trading wants to know, when all the options for Tesla are unwound, won't it tank? That's an interesting question. We were talking about how a lot of folks are flooding in to the calls out there in Tesla these days. The call wing was at about a 73 on the terms of the percentile for the year out there. So folks clearly liking themselves some calls. Of course, if you look at the net OI overall, it is still puts leading the dance from an OI perspective. So bear that in mind when everyone's talking about Tesla calls out there. But I guess this kind of depends what you mean by unwound here. Impression. Yeah, if all these 1 lots and 10 lots, everyone was coming in, gobbling up upside in Tesla, turn around and start dumping those calls, yeah, that would have an impact on the stock. I mean, remember Dan kind of broke it down before. You're selling those calls. Who are you selling them to? You're selling them to market makers. Market makers are buying all these calls now, and guess what? They're getting all these deltas. They don't want deltas. They don't want delta risk. So they're going to hedge that out. They're going to sell stock against that to hedge it out. So that's going to, if that continues, accelerate the move to the downside. So yeah, in your hypothetical scenario, if all people start hitting the bids on all their Tesla calls out there, then yeah, we probably will see the stock retrace. If by unwound you mean just kind of go through expiration and then maybe not put them back on again, yeah, then not so much. I don't think that's not going to really hit the stock at all. Dan, what are your thoughts here on this guy's scenario that if all these Tesla call buyers start hitting the bid, will it impact the stock?
Well, I mean, it's not like they're all just going to get unwound and nobody's going to buy it. That's like saying, what if everybody dies? Well, some people are going to die this year. Some people are going to die 50 years from now, and other babies are going to be born. Like, it's not all going to happen at once, I don't know, I guess that's a weird example, but so is this is a weird question, I think as people unwind, expiration comes or people sell their calls to take profits, there's somebody else there with their handouts by them, and not just market makers. Like this call demand is being driven by real demand, largely retail traders, I think. So, yeah, I mean, the only way this plays out as the question is sort of tilted is if something happens in Tesla and all of a sudden all the bulls are bearish and the people selling calls are the least of the worries, because that's when all the institutions will be dumping the shares too. So, yeah. I mean, that's my overall thought on it.
Yeah, this is a bit of a aberrant scenario out there. Everyone's hitting the bid. It's probably not going to happen, and if it does, there's probably some other underlying factors that are driving that are probably going to weigh on the stock a little bit more. So yeah, prescient trading. I wouldn't be too concerned about this unwind coming. That's going to annihilate all of this. All right, next up. Oh, yeah, I recognize this name. A regular listener. I think he's listening live right now. My boy, Luigi. He says, hola. Well, hola, Luigi. Just wanted to thank you and Dan for putting this show on. I am coming up on 3 years straight. Wow. I started with this program. We hear that a lot. This is kind of the entry point to options and to the network for a lot of people here, Options Bootcamp. He goes on to write, this is all I listen to with my commute to work. Wow, you still have a commute. You're one of the few. He said, my only regret is that I didn't sign up with Dan early on. May not have blown up my one account. My advice for new guys, mostly including the Robin Hooders, don't be too confident to ask for help. I own both of Dan's books and Brian's book. Thank you again, Mark, and all the hosts. And this is Joe from the Joe and Linda Duo. And he puts a PS. This is not the only show I listen to. The Options Insider app is definitely the best way to catch it all. Well, thank you very much, my boy Luigi, a.k.a. Joe. We love hearing stories like that. You guys are literally the reason that we do this show and put on the whole network. So we're glad to hear that it's working out for you. And Dan, what do you have to say for him saying he wishes he signed up with you earlier?
Yeah, I mean, hey, man, it is not too late to sign up with me or with anything else that you want to learn about. I mean, I'm 50 years old by now and been trading for a long time and just living life, and had Market Taker for 12 years. And right before the show, I was going through my bookkeeping statements just to, double check what my bookkeeper sends over. And I was like, I spent $2,000 on online classes, this month. Okay. And that's not uncommon. I mean, I'm not taking option trading classes. I've learned a lot about that. Still learning, but from the black and the blue now.
Are you learning how to make spaghetti again? Is that what you're spending $2,000 on?
No, but self-improvement is a super important thing. And we are a fortunate generation to have all these resources online where, if we want to learn about something, we don't have to go sign up for a college course and have an academic who never actually did it teach us, and go in person every 3 times a week. Like, there are people online who know way more than me about stuff that I want to know about. And, hey, man, if it's important to me, I pay them $1,000 or whatever, and they teach it to me. So whatever it is in life you're trying to learn, I am a huge fan of it. I put my money where my mouth is. And self-improvement is super important. So yeah, it's not too late. And I want to note too, like I said, I'm also still trying to get better at my craft with options. I mean, most of that is self-study, but keeping an open mind that the only thing I know is that I know nothing, like I'm always trying to learn and improve.
I'm just telling you, I could teach you spaghetti for half that cost. What do you think? Sound like a deal?
I will put my pasta sauce against yours any day of the week, Paisan.
My sauce is not my specialty. I'll do a few other things out there. I make a pretty mean chili, which is pretty good. I'll put that up there again. I make a pretty good rib. I'm starting to get better at the old smoker as well, one of the skills I've added over the course of this lockdown. So I'll do that. Sauce, not so much, but we'll see. We'll see. We'll keep it going. Speaking of seeing, since he made such a nice comment, we'll let Luigi ask his actual question, too. He says, you guys talked about using options as a long play for the underlying. I believe this is our episode before last, Dan, where you were talking about going out and just straight up buying calls on some names and how that could be effective sometimes. Luigi asks, you mentioned using closer to the money options. My question, is it reasonable to use the straddle price for that expiration and go that distance out of the money, or is the extrinsic value going to affect it too much? Also glad to hear the lobster is back. Was worried about it. I don't know. We haven't heard from the lobster in a while. I know he was under the weather, so he's not technically back yet. So we'll have to see how he's doing. Hopefully he's not under the weather anymore out there in his great fortress of Maine. But yeah, Dan, this goes back to what you were talking about before. We don't often advocate for this, but you kind of discussed it on the show recently about a simple, more straightforward approach to just using call options. Do you like this way to do it? Use the straddle for whatever month you're picking, and then go that far out of the money to pick your call strike?
No, I mean, not really. I think there's better ways to do it. Well, on the last episode, we were talking about Tesla, and one of the largely traded strikes was like the Jan 80 strike calls, like absurdly deep in the money, and they're well, actually, I think that's kind of crazy. Like you don't have to get that deep in the money, but like trading 100 delta calls sometimes is the best way to do it. Trading at the money calls sometimes is the best way to do it. Trading the cheapy lottery tickets sometimes is the best way to do it, all for long call positions. It's just really situational. And, I know when you're first starting out, it's like, well, what the hell does that mean? Like, what is the situation, But like the more experience you get, the more you can really fine tune and tailor that attack, like that very specific trade that accomplishes what you're trying to do, and if you're new to trading too, like that might sound weird too. Like what you're trying to do, I'm trying to make money. Well, oh yeah, everybody's trying to make money, but how are you trying to make money? Like what is your plan? Like what do you see that makes you think this could happen and us all get in here and get out there, So no, like as a rule, using a straddle price or a certain delta or a certain anything, I think ends up being an oversimplification.
Yeah, plus, as I recall from your strategy that episode, you wanted a little bit closer to the fire. You wanted a little bit more meat on those bones, right? You didn't want to go that far out away from at the money. If you're going to do that, you might as well do like an iron condor or an iron fly or something and get the wings going. But I think Dan wanted a little bit more meat on those bones. Am I correct, sir?
Yeah. I kind of forget all the details we were talking about. It kind of vaguely rings a bit of a bell. But yeah, like there are a lot of times when you want that really high gamma, because it's going to be a short-term play and, you want it to go from, where it is now and have that delta grow in your favor. And you're not so worried about time decay because it's a short-term play. And sometimes you want something different.
Remember, listeners, Dan has suffered significant head trauma, so his long-term memory show to show not the best. So bear that in mind as you're asking your questions. Next up, we got a little bit of a comment. Mikey, he's a smart person. He agrees with me. Mikey says, I agree with Mark. You are a genius, sir. Mando is an awesome show. Yes, you are correct. The Mandalorian, talked about it. I think we had a listener question a few episodes back about how awesome is The Mandalorian. Yes, the answer is it is awesome. And you can always tell a very smart person, nay, indeed a genius, because they agree with you, which is why Mr. P, we don't always see eye to eye on the show, so maybe not the smartest knife in the shed. What do you think, sir?
Dude, no, let me tell you, when we talked about this last time, if you remember, Mr. Short-Term Memory Loss, if you remember, I said that I did not see the show yet, and here I am. You're maligning me and slandering me over here. And
I just said you had severe head trauma, that's all.
I'm just about to give you like such a nice compliment to my good friend Mark over here. Goodness gracious.
All right, go ahead, proceed. What is your compliment for me?
So, periodically, like anybody else, like Kathleen will go through the bills and be like, I don't know, should we cut anything? And so we made the switch to get rid of our stupid DirecTV and go, all digital or whatever. And so we decided, because it was like a difference of a couple, like $1 or $2 extra a month, to get Disney Plus, largely based on Senior Longo's recommendation of The Mandalorian. And we Kathleen and I both started watching. And Kathleen's, she's not into like sci-fi or that kind of thing. And we actually both really love this show. We're still in the first season, 5 or 6 episodes in, but that is a solid show. I love it. And Baby Yoda is so darn cute.
See? Just follow my lead, sir. I will lead you in good directions, including cheap ways to make spaghetti. But I'm glad to see you're liking. I gotta just give you this one nugget for anyone else out there who's in your boat who's just in season 1. Season 1 is awesome. Can I just tell you, season 2, they turn it up to 11. I'm just going to put it out there. It is even better than season 1 in just about every way, shape, and form. Bigger, more epic, crazier characters, new characters from the past coming. It's gonna be fun to watch your arc through this. You're probably gonna have some questions for me, and I will promptly route them to my 12-year-old who can answer them all for you in terms of who the characters are and stuff. But there's a lot of characters coming in from old school Star Wars and new school, which is fun. We can spend the rest of the show. But besides, what do you think? We have a Mandalorian spin-off show on the network. What do you think, Dan?
I think we should. That would be a good option.
That would be a hot show. I think people would tune into that. We'll call it the Baby Yoda Files. I'm not sure there's no trademark associated with that. It should be pretty easy out there. All right, we could talk Mando for the rest. What do you guys think? You guys like Mando? I know some of your listeners have already weighed in. You say you like it. It's good stuff. Probably the only good thing. I haven't seen the Mulan movie, but one of the few good things on Disney Plus right now. But that seems to be changing if you look at Disney stock prices, any indication. All right, next up, Inkle wants to know, new to the show and to options. Well, welcome, Inkle. You are far from alone these days. He or she's asking, are VIX options appropriate for beginners, or should I start somewhere else? Keep on being awesome. Well, thank you, Inkle. You keep on being awesome as well. Everyone who listens to this show is awesome. We just won't tell Mr. P. He won't get in on the awesome party here. But yeah, are VIX options appropriate for beginners? A short answer, I'm just going to put it out there as no. I'm hard pressed to think of a scenario where I would recommend VIX options as the starter options trade to just about anyone. It's just not an appropriate choice for a variety of reasons. You're just coming to grips with things like delta, gamma, theta, vega, how they all work, what options are, how these things move, and now you're going to go out and trade a derivative of derivative? That's insane. Don't do that. And then on top of it, even derivative of aside, just about everyone who comes to VIX for the first time, they have a misperception of it. They've seen it quoted maybe on a website you like, maybe on like a CNBC or something else. People throwing out this number of VIX. VIX is at 23. I just mentioned earlier in the show, the VIX is in the 20s right now. What is that? That is the VIX Cash Index. It's an interesting indicator, but that's all it is. It is meaningless when it comes to what you're actually trading out there. And everyone who dives into VIX options for the first time thinks they're buying a call on that index, and you're not. You're buying it on the future. So now you have to go out and familiarize yourself with the VIX futures term structure, which is a, shall we say, strange beast right now. It looks pretty weird out there. It kind of gaps up to around 26 or so and then hovers there throughout the end of the summer and beyond. That comes off again. It looks like a big plateau if you look at it right now. What does that mean? It's open to many different interpretations. But if you're going to trade VIX options, you have to know that. And you also have to know which option, and we should say which future your option is queuing off of from a price perspective. So if you get that wrong, you're going to screw it up. So there's a lot of stumbling blocks, a lot of pitfalls to trading VIX options for the first time. So I would say no, do not make that your first options trade. Dan, anything to add there as your dose of Passarelli seasoning?
Yeah, you know what? I will tell you, starting out with VIX options is a freaking terrible idea. Terrible idea. It's a terrible idea for most intermediate traders. And don't get me wrong, I am not saying VIX options are bad. They have their place, and a very important and useful place in the landscape of investing and option trading and everything. Like, they're great. But that's the biggest mistake a newbie trader can make. Like when somebody asks me, like if it's a newbie, I just say, no, stop, please don't do it. If it's an intermediate trader, I start out with the question, okay, what is the underlying for VIX options? And 95% of people get it wrong. And I just say, okay, no, you should not trade it. Once you know the answer, come back to me and we'll.
Yeah, so we all agree. That's one few times Dan and I see eye to eye. Interesting. So you could tell he's a smart man today. All right, let's keep rolling here. We got a bunch we'll go a little long here because it is a holiday themed. You guys have a bunch of questions to end the year. So why not treat you and do a few extra here? Let's go out to frequent question asker Baiju Thomas. I do believe he's the guy, Dan, that you maligned and said he was named after some Chinese liqueur. So we owe him a couple of questions, I think, after your unfair maligning. He says, hey, Mark. Well, hello, Baiju. I said, haven't heard you guys mention these IPOs yet of Airbnb and DoorDash. I'm wondering why. Your opinions would be great. Thanks. Well, Baiju, there's a couple of reasons we don't really dive deep into IPOs right away. First off is that they're not optionable right away. Typically, it used to be at least a couple of weeks for the options to be listed on a name, and usually a lot longer than that, sometimes months. That was back in the old paradigm, though, when exchanges weren't all for-profit public entities and they weren't all fighting for every sliver of market share, and also when they needed any little boost they could get to their bottom line. So now they've fast-forwarded that process. The exchanges, usually CBOE leading the way, sometimes other ones, and OCC are able to list these and get them approved and make them optionable a lot faster. We've seen them as soon as, about 5 days or so, about a week is usually the quickest I've seen that turnaround. And actually, your question has good timing, Baiju, because DoorDash, not optionable yet, which is why we haven't talked about it, but Airbnb options just went live today. So we do have a little bit of grist for the mill there. I pulled it up right before I looked at your question here. There's decent paper. There's about 63,000 contracts on the tape as of a little while ago. It looks like the top trades all premium buying, which is not really a surprise, all through the offer, too. The Jan 160s and Dece 140s were leading the dance coming into today's show. Let's see where Airbnb is trading right now. It's at 139 even. So the Dece 140s make a lot of sense. That's the at-the-money strike right now. The Jan 160 is a little bit more optimistic. They were both buying out there. There wasn't a ton. It was about, I'd say, 6,000 or so each of those on the tape. A lot of it in smaller chunks, like 200, 300, 400 here. So kind of interesting to see smaller chunks breaking off as part of these larger trades to just gobble up premium out here. Another reason we don't talk about IPO options too often is usually these things shape up pretty much the same way all the time. These names are hard to borrow in the outset because there aren't a lot of shares available. So what happens in the options? People use the options as a surrogate for shorting the stock. They're going to sell calls and buy puts, and you're going to see cheap premiums in the calls. You're going to see extreme bids to the puts. So people are using them as a way to get synthetically short stock at the end of the day. They're getting liquidity in the options that they can't find easily or access easily in the stock. And so that's usually what we see. We're not seeing that right now in Airbnb, which is kind of interesting. That makes it maybe a little bit aberrant just for that reason alone. People aren't just crushing the calls, they're actually buying them. So that's maybe why we're in a little bit of an interesting scenario out here. Dan, any thoughts here on these recent IPOs, DoorDash or Airbnb, or just the notion of what goes on around stocks when they IPO from an options perspective in general?
Yeah, I mean, like, the reason why we haven't talked about them, like you said, Mark, is, I mean, this is an options show, and, you know, there weren't options since our last show, I don't think. So, yeah, you know, I mean, and, you know, everybody's good at some things and not good at other things, and I'll be the first person to tell you that there are other people who are way better than me at, like reading financial statements, you know, the P&L and, you know, cash flow and blah, 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 all that stuff. People way better than me out there. That's not, you know, something I would consider myself an expert in. You know, my trading involves reading charts largely, you know, which is basically trading off a map of what all those people who are good at that stuff were doing, you know? And, you know, like you look at a chart of Airbnb and there's like, what is there? Like 4 big fat bar, like where's the moving average? We're going to look at the 2-day moving average, you know, like there's not a chart to look at yet. So, even that Airbnb does have options, it's still going to be a while before most of the option trading strategies that we work with our traders on, you know, our students on, can really execute. You know, all that said, I feel like they both seem like nice, pretty good companies, and I bought a little bit of both of them.
Look at you gobbling up IPOs there. So you're buying stock or you're buying the options?
But
you can't buy options on one. So you bought stock on both of them. Interesting, Mr.
Yeah, stock on both of them. I think the day after Dash came out. which I think was the day Airbnb came out, if I'm not mistaken.
Yeah, so these are interesting. We don't really get into overall valuations too much here on the network, which by you, if you've been listening to it for a while. I think one of these makes a lot of sense to me, the DoorDash, because everyone and their mother is using this, so they're dumping their stock to the public, a.k.a. the greater fool, at the height of their popularity. That makes total sense to me. Get out while you can. From an underlying perspective. Airbnb makes a little bit less sense from a timing perspective. I think longer term it might make some interesting sense, but doing it now when they're kind of at the nadir of, I got to imagine their service, I mean, outside of maybe some cabin rentals here, who's actually renting other people's houses right now? Probably not a lot of it. So that one makes a little bit less sense to me. The DoorDash, though, of course, very hot right now. Will it stay hot once the pandemic lightens up a little bit? That's the question. But the interesting stuff I want to see when the options list on both of them, so we have more meat to break down. All right, Dan, let's wrap it up with this one here. This is for you. This comes from McDougal. McDougal wants to know, what does Dan think about Bitcoin options? Obviously, Bitcoin, another timely question. Bitcoin just blowing through the 20,000 level yet again. Obviously, we have a lot of shows on this network that talk about that. Crypto Rundown, check it out if you're interested, every Monday, listeners, as well as you touch on it on Twifo sometimes. So I've had numerous opportunities to weigh in here on all things Bitcoin options. Dan, I'm curious, what are your thoughts here now that Bitcoin's blowing past its all-time highs about Bitcoin options trading?
Yeah, it's an interesting question. I don't know the answer. When VIX was really in its heyday, the last time it was flirting with 20,000, I was trading some of the spot. I even had a mine for a short time, but I got rid of it. I'm definitely intimately familiar with it, and I get it, and I'm open-minded to it. You also have to consider it's something that some dude who we don't know who he is sat in his, probably in his mom's basement and came up with this idea to trade this thing that you can't really do too much with. So it's kind of weird. Is there a utility for it? Because anything that is an asset has a value that is not, which is different than price, and I don't know what that value is, but, there could be a value one day, and that's what the speculation is, just like any stock. You look at tech through the moon, but it's that way, at least in part, because people recognize that it's the birth of a whole new thing, and it's a leader in that whole new thing, and it could have extreme value one day, and they're getting ahead of the curve. So I feel like I'm doing a lot of hedging today, but these are pretty thought-provoking questions, that just don't have those simple answers. And frankly, it's kind of fun to talk about, and for me to learn by my own answers as much as anybody else, Well,
we're all learning about Mr. P a lot on the episode today, including himself. We learned that he used to mine Bitcoin. He spends $2,000 learning how to make spaghetti, and he loves The Mandalorian. Does that sum it all up, Dan? We learned a lot about you today.
That's basically it. No, I don't need to learn how to make spaghetti. I've been doing that for 30 years, and I got it down to a freaking science, Mark.
Perhaps I have unfairly maligned you there, sir. So yeah, get to know Dan on this episode of Options Bootcamp. But that music means we are done getting to know him and answering your questions, unfortunately, for this episode and probably for this year. I don't think we have a chance to squeeze in any more here before the end of the year. We'll have some more in the can that'll probably hit you there as well. So if this is the final episode of the year, I want to thank all of you out there for making Options Bootcamp and the whole network just such a success here in the year that was a dumpster fire of 2020. One of the highlights was seeing so many new ears joining us here on the network and on our website on the eyeball side and everything else. So we appreciate all of you. We love you all. Keep those questions, keep those comments coming. Everyone's asking about, hey, do you offer services and alerts and maybe some more premium type offerings and things I can subscribe to? Stay tuned for that. We're mulling over some ideas that might make things interesting for you guys, on top of what we already do. Something interesting for those of you who want to kind of go to the next level. So stay tuned. Stay tuned on that front. Before we go, Mr. P, do you have any final words of wisdom or thoughts you want to share with our audience here as we wind down the amazingly awesome year that was 2020, sir?
Yeah, you know what? I would just really, truly like to offer a statement of just that I hope everybody's been having really great holiday season. It was a weird freaking year, man, but it wasn't all bad, and there's good hope for this coming year, and you should enjoy your family. And man, I imagine I can speak for Mark on this one too. Like, we really love doing this, and just giving what we can to the community, and just thanks for being part of it.
Well said, sir. Something you and I can see eye to eye on, as well as the fact that Mando is awesome. But thanks to all of you out there. Also, thanks to the folks at Demand Derivatives. Remember, they extended their campaign because so many of you guys were asking questions and wanted to know more, and we're actually investing in it. So check it out over there at demandderivatives.com/crowdfunding to learn more. And on behalf of our friends over there at Demand Derivatives and Mr. P, and indeed myself and everyone here behind the scenes at the Options Insider Radio Network, I want to thank all of you out there for downloading, streaming, subscribing, for everything that you've done this year, leaving reviews, asking questions, downloading our app, just for being you. Keep being you. We'll see you back here next year with a whole bunch more Options Bootcamp.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.